Welcome to Masters of Risk, the podcast where we uncover what is top of mind for business leaders today. I'm Yashi Yadav, and I will be your host every month. Let's get started. Hi, everyone, and welcome to another episode of Masters of Risk. Joining us today for an amazing conversation will be Allan Rayson, who is the Chief Innovation Officer at Encore Bank. Allan, I'll give you a few moments to introduce yourself.
Yeah, absolutely. Thanks for having me. I'll give you a little bit of background, but I definitely look forward to our conversation. Very much appreciate the invite. Um, let's see. As you said, I am responsible for technology and innovation for a bank called Encore Bank, based out of Little Rock, Arkansas. I am over in Austin, Texas. We're about a $4-ish billion bank today, only about 4 years old. So we've experienced pretty significant growth over relatively short period of time, which we're excited about. But yeah, a lot going on in the tech and innovation, banking, fintech space. So plenty of things we can discuss for sure.
Yep. No, I definitely hear you, and that's extremely exciting. I mean, to your point, it does feel like you guys have ramped up pretty effectively in just a couple of
Yeah.
years. Have you been with Encore since its inception, or did you join a little bit after its
Yeah,
founding?
pretty much from the jump. I joined in 2020, and um, our co-founders had acquired a charter in a bank charter in 2019, knowing that we were going to strip it down from a technology and asset perspective. But yeah, I've pretty much been involved from the jump, which is exciting.
Yeah, definitely. I mean, you've been able to see the
Yeah,
growth,
definitely.
right? So, I guess what I'd be curious to know, I know when we were sort of chatting earlier a few weeks ago now, um, I heard a little bit about your background in terms of it being non-traditional. Would you mind kind of sharing with us, how you got into the fintech and banking space and where you just, all the fun
Yeah,
stuff. Let's get into it.
absolutely. I'm not sure how far you want to go back, but we'll at least give a little bit of context, for the audience. But yeah, I guess going back, I grew up in a military family. So my mom was a Navy nurse. We moved around all over the world. Pretty much every 36 months we were moving somewhere new, um, and learning new things and doing new things. So I guess maybe I've always been a bit of an adventurer. Maybe and that has influenced my professional life and professional career. But um, I went to grad school. Got out of grad school in basically early 2001, right before
Hmm.
9/11. Right before the dot-com bust at that time. Came into commercial and corporate banking. Kind of grew up on that side of the business, and spent quite a few years there. Probably spent better part of the next 12 or 13 years on that side of the business, and was responsible for running teams of bankers, that were ultimately
Got it. Okay.
responsible for going out and identifying opportunities for us to make loans.
Hmm.
Usually larger, middle market, more complex, types of credit facilities. But then I moved to Austin in 2000, roughly 2013. Sort of caught the entrepreneur bug, which is not hard to do here. And crazy enough, left banking. Um, was in a relatively high-paying job at the time, and
Uh-huh.
had young kids and a mortgage and all those things, and took out a second mortgage on my home at the time. Left banking altogether to go launch an early stage, kind of startup payments company.
Oh,
Yeah.
interesting. Okay. And what was the name of that company,
Yeah.
if you could
Name of
just
that
remind
company
me?
was called Paid Up. And what we did, we basically built a proprietary payments product on top of Stripe's technology at the time. And so we would go out to small businesses in the United States, and I'll tell you a little bit more about who those small businesses are. But we'd go out to these small businesses in the United States that were having trouble collecting money that they were owed, their accounts receivable. We would take over that process for them and manage the entire accounts receivable function on their behalf. But they weren't just small businesses; they were very niche. It was a very niche business because our clients were some of the largest youth sports clubs in the United States. So think about like high-end volleyball, high-end baseball, basketball, soccer. Those youth sports clubs were our clients, and we would manage payments on their behalf. So pretty niche business.
That is, I mean, that obviously sounds very niche.
Crazy,
It's
right?
not every day that yeah, I mean, I've never heard about that business model before personally, and especially that specific sector itself, I think is not, it's, not massive. Like, it's obviously very limited in terms of who you're
Yep.
engaging with and actually doing
Yep.
business with. So something that I'd be curious to understand is, how did you, or the firm, I guess, decide or set the criteria for the accounts receivable risk that you were taking on? Like, were you doing it in any capacity? Did you have certain limitations in terms of dollars that you were willing to take on
Yep.
of risk? What did
Yeah,
that
great
look like?
question. So, couple things that we found, and I guess this all goes back to people always ask like, how did you get into that business specifically? And it is 100% a function of my kids. My oldest at the time, specifically, when we lived up in Dallas, his name is Will, and he was playing select or club baseball. And kind of
Yeah.
the dynamic across the country is, college recruiting doesn't really take place at high school games that much anymore. Really takes place at when these travel clubs go and play in big tournaments. So for a kid that wants to go to college and play sports, joining a club team is really their pathway to get a scholarship, get a college scholarship. But
Yeah.
a lot of these parents have to
Right.
pay, $2, 3, $4,000 a season for their kids to play. Um,
Of course, yeah. On top of, I'm assuming, all the
oh yeah,
travel and the accommodations. I mean, I have sort of a high level
yep, huge
understanding
business.
of club sports. Yeah,
But
yeah.
we, from a business model perspective, I mean, the problem that we were solving in that space is that these youth sports clubs were oftentimes founded by athletes, people that had a semi-pro or pro career in whatever their sport was, but non-business people. So they really struggled with the business process side of things. So we would bring that expertise to them and take over that accounts receivable process, that payments collection process. But we did it so well that the club would go from leaving 10 or 12% on the table in uncollected funds to about 1.5% when we were managing it for them. So it's a huge windfall for
Wow.
them, and we
Right.
kind of paid for ourselves in so many ways.
Yeah, I mean, I was going to ask, like, if you suffered losses and, how that impacted the business process itself, and were there things that you changed along the way, lessons learned, like what was that like for
The old
you?
pivot, and I hate that word, but it is what it is. When we,
Yeah.
interestingly, when we launched the business, we set out to be lenders. We thought we could make loans on behalf of the club to help these parents finance, $3,000 over the course of three or 4 month season. We found that parents didn't love that. Like, they would rather you get the points on their card, or find some other mechanism to pay for it. So we did switch the business model to more of like a business process outsource type of play, from the standpoint that we would
Yeah.
manage that business function on behalf of the club.
Got
So if
it.
there's ever a
Okay.
niche business, that would probably be it.
Yeah. No, I mean, it definitely sounds
Yep.
like it. So, I'm assuming, I mean, are you still sort of doing some work for them on the side now, or have you completely kind of pivoted, as you say, into sort of now the community banking space with
Yes.
Encore? What did that
Yep.
transition look
We
like?
did okay with paid up. We ultimately got to a place where, we had a great product, but but we were sort of capped in terms of what we could charge for it. You know, being in the
Right.
youth sports space. So we certainly learned some things, and ultimately, kind of sold off components of the business and unwound the rest. But at that point, I did come back did okay with paid up, but didn't make the $1 billion that we all aspire to make. Um,
Right. Of
Came
course.
back into banking at that time, and then ultimately through a kind of right place at the right time, and a lot of good fortune, um, ended up with Regions Bank here in Central Texas, and responsible for um, the Central Texas market, Austin, San Antonio, Rio Grande Valley, and did that for about 3 years, and then ultimately got huge opportunity from the co-founders of Encore to come over and not only launch the Austin banking market, but also take on responsibility for technology and innovation for Encore, which has been an absolute blast. So I kind of came over in a dual role, and then ultimately transitioned to primarily to being responsible for tech and innovation for the company. So when I say
Got it.
non-traditional,
Yeah.
hopefully that gives you a little context.
No, I mean it. It definitely does, and I think you know, moving into talking about sort of your role now and sort of what your responsibilities are and kind of the work that you're doing. I'll be really honest with you, Alan. I have not heard the term, innovation officer for a
Yep.
bank. That to me seems very Silicon Valley. I mean, it's not, it sounds non-traditional, and when I think of banking, I do think of it in a bit more of a traditional conservative
Yep.
function. So, I mean, what
What
is it
is
that
it?
you do? Like, why don't let's get
I
into
love
that?
that question, and many want to know that because I get asked that fairly frequently. But in my role, I am very fortunate to have a lot of experience on the business side of banking. Having run teams of bankers, been a banker myself at one point. Um, know a lot about how banks operate, how they make money, how they lose money, where the risks are, the compliance aspects of it all, but um, and also having a technology, payment software development background as well helps me. So, like my business experience informs what I do on the tech and innovation side of things. So I'll give you a couple of examples as to where that plays out. So my day-to-day role is my day-to-day kind of tech and innovation role for Encore is identifying um, new revenue streams for the bank and optimizing existing revenue streams. So at a very very high level, that's sort of my day-to-day, and we can certainly get into those weeds as much as you want to. But those two primary objectives of identifying new revenue opportunities for the bank and optimizing existing revenue streams are kind of how I spend Monday through Friday and sometimes Saturday.
Got it. Okay. So, I guess maybe let's start with the optimizing
Hmm.
existing revenue streams. Is that more of a process improvement function? Is it decreasing risk elements? How do you do that? And I'm assuming a lot of your role is also being able to identify and delegate appropriately,
Yeah.
right? So, what does that um,
Yeah.
encompass?
It's oftentimes it's oftentimes easiest to give you some use cases,
That'd be
as to
great.
how
Yep.
all that plays out. But I'll use like I'll use our commercial lending program as a great use to kind of dig into. But I mean, you know how a bank functions. You know that banks, you know, build a deposit franchise as a mechanism to fund the asset side of the balance sheet. Meaning, you got to have a mechanism to fund those loans that you're making. But what happens, especially in a economic cycle like we're in right now that we haven't seen for a while. On the asset side of the balance sheet, which is where the loans live, kind of revenue producing assets. Ultimately, you get kind of squeezed in a period like this because from a repricing, you only have an opportunity to reprice your loans ultimately when they come to maturity. But yet, on the liability side of the balance sheet, your deposit franchise, to keep those deposits on your balance sheet, you got to pay more for them. Otherwise, that money, as some banks have seen, that money's going to flow into treasuries and get a good, risk-free return, or to money center banks, as we've seen, where the risk profile is perceived to be lower. You get the idea, but ultimately, you get squeezed on both sides of the balance sheet in an environment like we're in right now. So how do you account for that? You got to be creative in optimizing those revenue streams. So a great example of that is the build out is us going and building out specialized or unique deposit gathering strategies where we can lower our cost of funds on lower our cost on those deposits by building out a business in commercial escrow, for example. Think like 1031 exchanges, or association banking is a new business that we're building right now, where we are banking association management companies that then manage HOAs, if that's a term you're familiar with, homeowners associations.
Yep.
And we have a ton of HOAs in our footprint and in Florida and Texas specifically. So that's sort of what I mean by like optimizing revenue streams, is dissecting, the components of that revenue stream and finding ways to, make more money from those same assets. So building out a more robust, deposit franchise at a lower cost is kind of the key there.
Got it. Yeah, I mean, I think that to me definitely makes sense. And clearly, I mean, you've had a lot of success in the space with sort of these new strategies that you've built out. Now, I'm assuming that not every, let's say, initiative is successful, right? So have there been instances when maybe you were attempting to optimize a particular revenue stream, or were pursuing a particular avenue that didn't, bring you the returns that you were anticipating? And how do you sort of navigate that?
I think that's part of business. I mean, and we've certainly experienced that. We were talking about the word that I hate to use, but we still got to do it, and that's pivot. Learn from the experience, tweak some things, go back, try to execute with those tweaks that you've implemented, and that process never ends. I mean, there's always room for improvement in any of these businesses. But I will share, an example of where we had to do that, especially as we have worked to build out our deposit franchise. And that's, within that franchise, I mentioned that we have a pretty robust commercial escrow business at this point. So,
just to interrupt you, Allan, would you mind, for our listeners and for myself, defining what commercial escrow is? That might be a little bit of industry jargon.
Yeah, I would be happy to. I'm glad you asked as well. I think you can agree in this business, there's a lot of jargon, a lot of acronyms. But so what I mean, when people generally think about escrow, they think about the escrows on their mortgage, for example. So the bank kind of holding back, um, the PITI, if you remember that, principal, interest, taxes, and
Mm-hmm.
insurance is the I even almost forgot what it was. But
No
on the
worries.
on the commercial side of the business, it's different, but it's still the same. And so on the commercial side of the business, we've got some pretty advantageous tax strategies, um,
Mm-hmm.
like a 1031 exchange, where if you sell a property, um, and go buy another commercial property within some boundaries, you ultimately don't have to pay capital gains on that sale. It's called a 1031 exchange, but there's a component of that transaction where when that commercial real estate property sells, that money is usually going to sit in a bank for 4 to 6 months until that person or that business identifies another property that they want to buy with those 1031 funds. So when I say
Okay.
commercial escrow, we're usually talking about, um, keeping money on our balance sheet that's associated with a commercial real estate transaction is typically what we're talking about. A little bit different than
Okay.
mortgage escrows on a residential mortgage, but similarities exist there too. Is
That
that
makes
helpful?
sense.
Or did we
Yep, no,
add
that's
more
definitely
jargon
helpful.
to the mix?
No, no, that definitely is helpful. I think in the context of what we were
Yeah.
discussing, just wanted to
Okay.
make
Yeah.
sure that I understood that. But um, so now that we
Feel
understand
free to
that,
tell me,
if you
Alan.
want
I
to
still have no idea what you're talking
I mean, you're the expert here, right? So, of course, to me, this is a lot of this is still understanding kind of your business and the different areas and markets that you guys
about. Sure.
play in. So, it is helpful for you to provide that
Good.
additional
Yep.
context. So, I guess something that I want to get a bit more color on as well is you were talking about the present economic cycle and how we haven't seen it,
Hmm.
I would say at least in the last 10, 15
Yep.
years, right? How, and then now we chatted a little bit about commercial escrow and how it's related specifically to commercial real estate with the challenges of today in that specific market and just the economy. I think from an overarching perspective, how does that influence or impact banking for your bank specifically? Like, what are some challenges that you all have faced? And you could just give me kind of high
in this
level
in this
themes, I think.
cycle. Yep.
Yeah.
Yeah, I mean, and what I mean by we hadn't seen it in a while is, we really haven't seen. It's still unclear as to whether or not we're going to see a recession in this cycle. In normal terms, but like we haven't seen a down cycle like this since really 08, 09. So fast
Yep.
forward to
Agreed.
2023. You're talking about an extended period of time that we've kind of been up and to the right. So I don't know. I think it's sort of human nature to get a little bit lax, get a little bit lazy when things are always going up and to the right. So when we experience something like this, things tend to break, which we saw in March and April of this year with a few notable bank failures. But I do think, and we don't need to go down that path. The Silicon Valley and Signature and FRB issues have been discussed ad nauseum at this point, and those are in my opinion kind of unique circumstances. But
Agreed.
your
Yep.
question is what have we experienced? And I think it sort of goes back to what we were talking about a little bit earlier. Just if you kind of look at both sides of the balance sheet, for a bank, especially in the community and small regional bank space. You're talking about banks that are, call it 5, 10, 15, 20 billion in assets. Substantial banks, but still on the smaller side. Um, you've got, if your loan portfolio is commercial real estate, for example, well, those deals typically have a 5 to 7 year maturity on them, so you're not going to have an opportunity to refinance and reprice that loan for a while. So you kind of got what you got with respect to um, the rate that's attached to that asset. But on, like we were talking about, on the liability side of the balance sheet, which is where your deposits are. If you've got a high proportion of and I'm just talking about generically for bank balance sheets, but if you've got a high proportion of interest bearing deposits versus non-interest bearing deposits, well, to keep those interest bearing deposits on your balance sheet, you got to pay more for them. So your cost of funding that same loan goes up, and your margin goes down, which means that you're going to make less revenue, in a period like this. So, we've experienced that. We're stable, we're profitable, all's good, but not every bank is in that same, has those same dynamics. But it does create pressure, and creates strain on the smaller side of the industry, those communities and small regionals. So is that helpful?
Yep. Definitely. No, it is helpful. And I think in lieu of this topic, I'd love to kind of continue on and circle back to the idea, or one of the functions of your role, I should say, which is creating new
Mm-hmm.
revenue streams. I'm assuming to help also support some of, the challenges that
Yep.
you're facing. So I don't know if you're at liberty to say, but even if you could maybe give us some context on what are new revenue streams that you've explored, or just general ideas that you've had, or how, you know, what's Encore doing that's different or
That is
differentiated?
highly, highly classified. I'm kidding.
Okay.
It is still banking, so it's a pretty straightforward business. But um,
Right. Okay.
I'm not going to give you the Top Gun line that if I told you I'd have to kill you. But um,
Yeah. Right. Give me the secret sauce.
we want the secrets, or at least the audience does. So I think for us, we are primarily a commercial bank,
Mm-hmm.
meaning that we are using our balance sheet to put capital into small and mid-sized businesses so that they can then go do what they do. Use that capital to buy inventory, to buy another company, to acquire a piece of commercial real estate property that they're going to occupy. Um, they're going to use the bank's capital to do what they do. Um, and when you are in the commercial space, you tend to bank operating type companies. Companies that have a need for working capital, or a need for like M&A capital, mergers and acquisitions type capital. But when you're doing that, when you're banking those middle market companies like that, or the upper end of the small business space, which typically for a bank, just for the sake of saying it, we're talking about companies that are maybe 5 million in gross revenues on the low side, all the way up to a couple hundred million, maybe 250 million in gross revenues. So, pretty substantial businesses. But a bank wants to be in a position where they can monetize those relationships um, in more ways than just making them a loan and collecting the interest on that loan. Those middle market companies need resources, all sorts of resources, to manage cash flow, manage interest rate risk, via a swap, manage foreign exchange risk via, pretty straightforward, like foreign exchange lines and things like that. So
Mm-hmm.
where I'm going with all of that is being creating new revenue streams by delivering complementary resources or products to those middle market companies is what I mean by creating new revenue streams. So, couple of good examples would be with more and more manufacturing. When I started my career, everything was going. All the manufacturing was headed out of the United States to China, other places. Well, now a lot of it's coming back, given the supply chain issues that we've had through COVID and all that. But when that happens, there's a significant need for foreign exchange products and resources for these middle market companies. So part of what we've done has been able to stand up businesses that allow us to help those companies manage their foreign exchange risk if they're buying a product from outside the U.S. Or manage their interest rate risk if they've got floating rate loans, for example. So those are two pretty good examples of like complementary things that we do aside from just making a loan to them.
Okay. I think that's definitely helpful for kind of touching on a couple of different key areas that you guys play. So I have taken, Allan, a pretty good chunk of your time, and this conversation has been extremely engaging for me.
So.
Something that I
as
would
banking can be, I guess.
Well, you've made it fun. You've made a whole career out of it.
That's the nicest thing anyone has ever said to me.
Thanks, Allan. I try. So, my closing question for you is going to be, if you could innovate anything, what would it be? And maybe give us a little bit of a why you would innovate it.
That's a good question. There's a few things that come to mind. So one of the...
So you've clearly thought about this already.
I've spent some time thinking about this. If I had an unlimited budget and unlimited resources and developers, like what would I do? That's what I think about before I go to sleep at night. Here's a couple things that I would do, actually. One of which would be... I was actually, as odd as this sounds, I was reading an FDIC report, as exciting as that is, the other day that suggested that about 14% of the households in the United States are unbanked or underbanked. Not fully banked, I think is the term that the FDIC used. So, that's a pretty high number. You're talking about millions of families and individuals in the United States that can't really access the banking system as it stands today. They can't access credit, or they can't access a bank account to be, things like that. So, I mean, I put myself in that position, and I'm like, man, if I couldn't access credit, whether personal loan or whatever, and if I didn't have access to like a bank account, I would be at a major disadvantage, and in society as it stands today. So, if I had unlimited ability, or even if I didn't, I still want to pursue it. I would really work hard, and we're already doing some of these things, but I would really work hard to bring that number down, ideally to get it to 0%, but, at least getting it down from 15%, would be a huge step in the right direction to be able to allow like American citizens and people in this country to have access to the banking system is so critical to like them as people, their stability, their the amount of resources that they have or don't have.
Yeah, I mean, the U.S., I think we can agree, different systems, I should say different countries around the world focus on different parts of the banking market, but I think the U.S. specifically, we're a big credit focused country, right? I mean, we pretty much not having access to that can put some pretty serious
Huge
constraints
damper. That's
on,
right. Yep.
yeah, your capacity to
Yep.
move upward. Totally
So I
agree.
would, that's a big goal, that I have personally, and then, I think equally as important is the middle market companies need capital to be able to. They need capital and they need amazing people. That's basically what makes a business go. Um, but right now, as it stands in the banking system today, for a middle market company that wants to go acquire a piece of commercial real estate, or buy another company, or needs a significant working capital loan, it takes them 2 months, oftentimes more, to to access that capital, and they need it faster. Time kills deals, and time kills opportunities. So that would be another big goal that I have, is to be able to innovate on the commercial lending process in this country, to be able to get capital to these middle market companies more efficiently. Um, just like being able to get capital to to someone in this country that doesn't, part of that 14% that doesn't have access to the
Yeah,
banking system.
right.
So
No, I
yeah, these are
mean,
not small goals.
th- no, I was going to say, and none of them, I mean, it's also they sound, the entrepreneur in you is showing, is what I'll say.
Yeah,
That was the first thing I thought of. I'm like, wow, well, one, these have nothing to do with him personally. All of it's to kind of, give back to kind of society and like,
yeah,
you know, people outside of
yeah,
yourself. But two, also, I mean, they're great just as a business or as a
yeah,
concept. They do make logical
yeah. I mean, I
sense.
think,
It's
like,
just, you know,
just um, having been in the banking business and in finance for a long time. I mean, have kind of been around the block a few times, I guess, as they say. But I'm even working on like a YouTube channel, but to try to get some of this information out there. But like helping people build wealth, build their careers, all of those things lead to um, a better life, so to speak. I think in my opinion. Um, so any way I can help do that, and with an entrepreneurial spirit, is sort of what I'm about, I guess.
yeah. No, I love to hear that. I think it was really insightful, and I hope that you're able to slowly make your way to at least one of those
Thank you.
goals. Perfect. Well, thank you so much, Alan, for joining us here on Masters of Risk. This to me was truly an engaging conversation. Us being able to chat about what it means to innovate, kind of the type of risks that you've seen in the market, how you
Yeah,
guys are optimizing them over at Encore. Just all of that was a lot of great content and a lot of learning and education for me as well. So I appreciate the time and I hope to continue the conversation with you in the future.
yeah. No, I appreciate the forum, honestly, and appreciate the invite. I mean, there's a lot of work to be done in this space, um, but hopefully we're tackling some of it, and moving the ball forward from an innovation perspective.
Yep, I would definitely love that. Well, thanks again and I'll talk to you soon.
I look forward to it.